So I'm looking for massive weakness to add to my positions to make as much money over time as I can, because I truly believe in cryptocurrency, digital assets, and Web3 at large. I think this is game-changing for the future of the internet.
Also, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing or liking the video. It's free and you can always change your mind.
Now, if you remember, Bitcoin was launched in 2008, 2009 period. That is the same period when interest rates went to zero, and guess what? The halving cycle is exactly the same as the economic debt payment cycle. They're all the same thing because they were all born at the same time. So that, I think, is the big driver. The macro is the big driver. So when we zoom out, we look at the Bitcoin chart on a log scale, and you can see the trend rate of adoption over time. The acceleration is when the balance sheets start getting used and people start putting money into the space and the space grows over time. And we will see that ongoing. So the total crypto market cap hit 3 trillion at peak. What will it be at next peak? Probably 10 trillion. As more money comes in, more people stay in the system and opt out of the old system, or find new uses and applications in a Web3 world that makes the internet just better, fairer, and more democratized and more decentralized. But that trend rate of Bitcoin, well, we got in that beautiful cyclical low the buying opportunity we were all looking for. People are still arguing whether it's going to go lower, etc. The probability is it put in the lows and now we're on the upcycle. And it's what I think is the start of crypto spring. I think we've been through crypto spring and we're going to be moving into crypto summer. And we'll talk about that in a sec. Crypto summer is the point when prices start going parabolic. It usually coincides with the money printer go burr, or more cowbell, as I like to say. So there's some really good analysts in the crypto space, and one of them I really like is TechDev. I subscribe to his newsletter. I have no affiliation, but I subscribe to his work because I think he's very thoughtful and is not subject to hyperbole, but just very thoughtful in what he does. We do know that a lot of people like fractals in crypto. Sometimes they work, sometimes they don't. Do they give you an informational advantage? I think generally, contextually, they help you understand human behavior and how prices can move. I don't really like to trade on them all the time or, as the main thing, but as supporting evidence, often interesting. I've also had some spectacular failures with them too. If you remember the ETH call, the next leg higher call back in 2021, that was based on a fractal. It completely failed, but luckily I owned call options, so it wasn't that painful. But anyway, so you never always know. But the point being is this cycle is pretty similar to 2010-11 cycle. Same kind of setup. So that's interesting to me. What's interesting, it's a similar kind of setup from the 2017 cycle, 15-16 cycle. So we've got a similar structure and a similar kind of market. 2019 was a bit weird because we had that big correction over all of 2019 after a huge run to begin with, 300% up, then a big correction down, and then we sort of went parabolic. I have a feeling we might go parabolic earlier here because I think we're getting closer to a banking crisis within the regional banks that will require the Federal Reserve to step. Interest rates are kind of getting out of control, so interest rates going up, the yield curve inverted, bad news bears for the banks. You can use the KRE ETF to see where we are in that. But if that starts breaking 35, 30, then it's game on for more cowbell to come because the Fed are going to have to bail these people out. And then we've got the commercial real estate problems behind it. So that's the kind of backdrop of why the cowbell will come. And I think it's even an excuse. Maybe that's the reason the Fed are tightening rates even further, is to create a crisis so they can cut rates so they can monetize the debt. Because if they don't, they have to print more money because the interest rates are higher to pay for the debt payments, and that becomes a total catastrophe.